Coming up, Origin Energy details its cyber attack, China's rise in AI, and we preview the upcoming reporting season. All that and more next. Hi everyone, welcome to the SBS on the Money podcast for this Tuesday, the 28th of July 2026. It's a day where the Australian share market rose, the S&P ASX 200 up 0.6%. We'll have the details with Todd Hoare from LGT Wealth Management soon. But first, Origin Energy has now revealed the extent of its recent cybersecurity breach. The information of around 900,000 current and former customers was accessed, but a review of the incident is continuing. Now, the company had earlier said impact the data may include name, address, date of birth, phone numbers and account information, along with the last few digits of credit cards and bank accounts. For more, Stephanie Youssef spoke with Professor Damien Manuel from the Deakin Centre for Cybersecurity Research and Innovation.
So Damien, how does this sort of thing happen?
These types of hacks happen quite frequently, and there's a number of different causes of them. Some of it can be that a company has decided to outsource some portion of its business to a third party. It could be a managed service provider that looks after their network or their desktop systems in their offices. It can be sometimes, somebody has released their password accidentally because they've used the same password that they've used in the office for another website. And so they steal those credentials and use that to log into the organization. Sometimes it can happen through an accident where somebody's just, made a misconfiguration or an error in a system and it sort of went unnoticed and somebody found it and then exploited it. There is a trend we are starting to see where hackers and criminals, when they're looking to extort ransom from an organization, they start to look for staff members who might be willing to act as an insider and sort of pay them some of the ransom as a reward for helping them. So we are seeing this evolution and change of criminal behavior.
So when incidents like this happen, what are the company's responsibilities?
So really importantly, under the Privacy Act, so there's a thing called the Australian Privacy Principles 11.1, and in that it states that an organisation needs to provide the appropriate level of protection to make sure data is not inadvertently accessed or accessed in an unauthorised way. And it's also protecting that information from unauthorised disclosure and modification as well. So there's a few obligations from that perspective, mainly the Privacy Act.
What can scammers do with this type of information?
A lot of things can be done with this type of information. So if you think about the type of data that could be exposed, whether it's an address, date of birth, full name, sometimes there's additional details like it might be your payment record, payment history, potentially the bank that you bank with. All that kind of information is collected and used by these criminals to get an understanding of the best way they could target or scam the customers of Origin further. Like classic example, if you've got date of birth information, what you can do now is use that information to target the elderly, for example, because they're going to be less IT literate. They're more likely to comply with directions, particularly if somebody's pretending to be from authority or from Origin Energy. If, say, for example, somebody might have been finding it difficult to pay their bills and they're on a hardship plan, if that information gets into the hands of these criminals, they're likely to target those individuals because it's a vulnerable segment of our community, and they'll put pressure and use that sort of information that they've got to further extort them or threaten them with, various sort of consequences. The other aspect that the information is used for is also for continuing identity theft. So if you collect enough information on an individual, you can draft up, fake-looking Origin Energy bills, go into somewhere, use that as a form of sort of identity to start to accrue points, and it's how you build a sort of a fake identity, if you like.
So what's the advice for customers that have been caught up in this?
Yeah, so anybody that's been caught up in the Origin Energy data breach or any other type of data breach, first thing is be vigilant about who's going to contact you, over the phone or email. Often these, scammers or criminals will basically try and make a phone call, or they might have an automated sort of AI system that's doing the calls on their behalf and pretend to be somebody from Origin Energy. They might ask you to, authenticate and verify yourself, provide additional information. So always be very careful of somebody that's calling you, pretending to be from either the government, from your bank, or Origin Energy in this case. Always, hang up the call and find out some information about what they're after, hang up the call, and then contact Origin directly and go through their customer support. The other thing to do is, if you've used an account to access your Origin Energy bill information online or services, make sure that the account that you're using, the password is not the same as your other online accounts or services. We're all a little bit lazy sometimes, and we might sort of find it easier to just have one or two passwords that we use across all the services that we access. The challenge with that, if one gets hacked, then the criminals now have access to your other services because they've now identified your passwords as well.
That's Stephanie Youssef there, speaking with Professor Damien Manuel from the Deakin Centre for Cybersecurity Research and Innovation. Let's take a look at the Australian share market in more detail now, where the S&P ASX 200 added 0.6% to a 6-week high. 9 of the 11 sectors finished higher, including the banks, ahead of key inflation data, which will be out tomorrow. For more, including the growing role China is playing in the AI world, I spoke with Todd Hoare. He's the head of public markets at LGT Wealth Management. Todd, to start off with, what's driving investor sentiment at the moment?
Well, I think, Ricardo, there's several things that we should be focused on, but it's pretty hard to go past that AI thematic at the moment. We had last week, we had Kimi K3, that model release out of China. And what was really key there was that the Chinese are closing that intelligence gap with Western models, and they're doing it at price points that's now starting to make them very attractive to use. And so investors are trying to understand, what does it actually mean for the spending plans of Anthropic, OpenAI, these large Western large language models? And we're obviously struggling to figure out, is it negative for CapEx plans, or does it actually create greater demand? And so we've got this tug of war going on at the moment from the AI perspective. So that is key for sentiment. And then I guess the other couple of things that we have investors watching at the moment, we're in the midst of reporting season in the US. It's the heaviest reporting week of the season this week. Domestically, we've got some crucial inflation data out tomorrow, I think, from memory. And then later in the week, we've got the Fed meeting as well. And then I guess on top of all of that, we've got the Middle East as well.
Let's break some of that down. First of all, economic data. Obviously, the US Federal Reserve will be looking at all of that. Is the market betting on a rate rise from the US at some point? And what are the implications for markets?
Yeah, not at this meeting. So the market's not quite 50-50 for a rate rise at this meeting, but they are fully priced for a September meeting. I think what the market will be most closely watching is just the number of dissenters on the Fed and how evenly split they are. I think if Kevin Warsh, the new Fed chair, if he did want to, espouse his inflation fighting credentials, he does have a window of opportunity to raise rates and stamp that authority. At this stage, it's probably a fraction too early, but I think what we've seen with the ECB, we saw it in South Africa as well. The market doesn't have a tolerance for letting inflation get out of the genie inflation out of the bottle. And so I think they'll be watching very, very closely, to see what they do, but more importantly, just to see how hawkish they sound and whether they do have the stomach to tighten if necessary.
Tomorrow isn't just inflation data out of Australia. We've also got the unofficial start of reporting season here, I think, with Rio Tinto. How are global uncertainties and the volatile oil price likely to affect Australian company reporting season? Because yesterday we heard from Myer, which said consumer sentiment is being hit as a result. Today, Viva Energy said that the conflict drove a short lift in regional refining margins and its shares are up as a result.
Yeah, I think it's to be expected that I think the consumer in particular and the consumer discretionary space, they're probably going to have somewhat of a tough time. They've got a bit of a perfect storm at the moment. You mentioned higher oil prices, obviously. I think the latest CBA credit card data that we've seen is Fuel costs are something in the order of about 4 to 5% of household budgets, and if that line item is approaching $90 to $100 a week, it starts to bite, and it actually has the same, or if not a greater impact than a rate hike. So it's going to have an impact, we think. But I think there's also going to be some other issues at play as well. Obviously, for many on the eastern seaboard, we've had a very, very mild winter, and so that's probably going to crimp demand for clothing, heaters, and the like. We've obviously got some cost of living pressures, and for a lot of consumers, they can't cut back on mortgage repayments, they can't cut back on insurance and utility bills, and so they will cut back probably on consumer discretionary spend. And on top of all of that, we've had 3 rate hikes. We've got house prices that are falling a little bit across the eastern seaboard, capital gains tax associated with the federal budget. So I think for that whole space, it is going to be very, very difficult. And it's going to be incredibly hard for a CEO or a chairman or chairwoman to stand up at their annual results and say that the outlook's rosy. And so I think that the path of least resistance for a lot of that sector is to muddle through at best.
Yesterday, I was talking to my expert about how investors will likely react to these company results. And she mentioned that algorithms are playing a huge part at the moment, right? So you're getting these huge swings, immediate reaction. I mean, is that something you're expecting when it comes to the way the market reacts to profit reporting season?
Yeah, I think we definitely saw it in February. We spent a lot of time over the last couple of days just analysing earnings and revenue and EBITDA trends into reporting season, just looking for where there might be some fragilities. It's a trend that I don't think is distinct to Australia. You've actually seen it globally, where even small misses have been punished quite severely, so that the tolerance of investors for earnings misses is very, very low. For Australia in general at the moment, forecasts for all 11 sectors are being cut. The domestic backdrop is going to make it very, very difficult to give positive forward guidance. And so we think that going into reporting season, maybe the best outcome for a lot of fund managers and a lot of investors is just to try and avoid those minefields, those severe down days. And if you can do that, you'll probably end up with a successful couple of months.
You started by talking about the AI story, right? Yesterday in China, we saw the successful float of chipmaker CXMT, shares up 500% at one stage on day one, and they're only down 1% today. So I guess in comparison, that's a good story. We saw the US float of SK Hynix, a South Korean company, earlier this month. That was also a success, but their shares are down from its recent peak. SpaceX, though, below its IPO price. And we're seeing today also a bit of a sell-off in semiconductor space, particularly in South Korea, where it's triggered a circuit breaker in its share market today. There is still a potential pipeline of AI tech-related IPOs as well. So does this sector still have legs?
It's a very, very good question. I think that's what the market is grappling with at the moment. We had a version of that last year in January when DeepSeek released their large language model. And here we are, maybe 18 months later, and it seems like we're going through it again. I think, yes, the pipeline is open, but what we are seeing is that the Chinese technological advancement is actually happening at a reasonably rapid pace. And so what that is doing is it's creating uncertainty on CapEx plans, it's creating uncertainty on pricing. And if you get those two things, ultimately what that means is it creates uncertainty on margins and profitability. Globally, I think there is an expectation that we will go through somewhat of a productivity boom as AI becomes more ubiquitous, gets used in greater breadth. But what I think ultimately needs to happen for these IPOs is we probably need to see some realistic expectations of what they're worth. We've seen, I think, when you saw SpaceX and you've seen some of these others, let's not lose sight of the fact that these IPOs have had 5, 6, 7, some cases 10 funding rounds. They've been very well priced. And so to come to the equity market, it either means they're looking to exit, and that's not necessarily a positive reason to invest, or they're going to be very hungry for capital. and that obviously means more supply. So I think, yes, the market is open. It is going to be more volatile. The windows will open and close, I think. But more importantly, I think vendors, so the companies that are listing, they're going to have to set some realistic expectations of what they're worth, I think.
And in just wrapping up, what are you telling your clients right now, and where do you see the opportunities for investors?
So the message hasn't changed a great deal. I guess our view has been that we front-loaded a lot of the returns over the first 6 to 7 months of the year, and it's been a reasonably positive year-to-date performance from most equity markets. Our view is that the second half of the year is probably going to be choppy to sideways. We'd like to see some more volatility. I think we would anticipate seeing some more volatility. And the thing that we're most closely watching, as I mentioned before, just these Chinese technological developments, whether it's in semiconductor tools, which is what caused the Korean short circuit today, whether it's in large language models, and what that actually means for the deployment of AI and the broadening of markets. Ultimately, we still think that marginal dollars should leave Australia, which makes me sad to say, but there is just a plethora of opportunities more broadly to be gained than there is here. So if we can get, I think if we can get some clarity on the Middle East, what we might find is that places like Japan, which have done well, and particularly places like Europe, could actually start to do much better than what they have done.
That is Todd Hoare there from LGT Wealth Management, and he wraps up the podcast for this Tuesday. A bit of a note, I'm taking a bit of leave, so Stephanie Youssef and Raina Sarampait will fill in on the SBS On The Money podcast over the next few weeks. It still will drop after the market close, and it will be back tomorrow. This SBS On The Money podcast is provided for informational purposes only and should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.